Financial Accounting 15, Payables, Accruals, Payment Terms, and FOB. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, St. Louis Test Prep, our email address, our website, and our book, Cost Accounting for Dummies, is out March of 2013. We'll have a free online course to teach the book that will be ongoing. So this section is about payables, and there's a few things that you need to learn on payables that haven't been covered in prior videos. And that's what I mean by this concepts section here. Checks are considered paid, and if you're paying a check, payables are reduced when the check is mailed. When the check is mailed. If you have not mailed the check yet, you haven't made payment, which means you shouldn't reduce the payable. Goods are received before year end and should be recorded in the purchases as purchases, and purchases are an inventory account before year end. So if you get something on your shipping dock, it should be added to inventory and added therefore as a payable. If you record purchases and accounts payable at net amounts, that assumes that you take available discounts. And we'll see an example here where you're offered a discount. And if you record at a net basis, it's assumed that you take the discount. Goods shipped FOB destination, which is an old term that means free on board. Excuse me, what that term means is that the title does not pass for those goods until they are received. So if it's in shipment, if I'm Levi Strauss and I buy blue jeans from Old Navy and they're on the truck at 12/31 at the end of the year, they are not my Old Navy's jeans yet until they get to the store. So if they're on a truck somewhere, they are the shipper's goods, still owned by the shipper, not by the buyer. A lot of these terms are covered in a procedure you do in auditing called the search for unrecorded liabilities, which is an auditing term where you're trying to make sure that accounts payable is not understated. You want to make sure that all the accounts payable are included. So with all that being said, let's do an example. Let's assume that your accounts payable at the beginning of December is $100,000. And we have several transactions that happen right at the end of the year. So on 12/28, the company writes and records checks totaling $50,000. Those checks are mailed on January 2nd of the next year. On December 29th, the company receives goods ordered earlier in December. The dollar amount's $30,000. The invoice isn't paid until January 3rd of the next year. The terms are a 2% discount within 20 days. 210 net 20 would be the terminology. And we also are told in the question that payables are recorded on a net basis. And finally, the third transaction, goods are shipped to the company on December 30th, FOB destination. They're received January 2nd, and the dollar amount of that shipment was $10,000. And to keep it simple, there are no other changes to accounts payable. Nothing else impacts accounts payable between December 1st, which is our beginning balance, and the end of the year. And so the typical test question that you're asked is, what amount should the company report as accounts payable at 12/31 of the year? And so in my solution, I have several steps. The first is checks mailed after year end, and these checks are mailed after year end, are not considered paid before year end. They're still a payable. So the $50,000 should be included in accounts payable. We don't reduce accounts payable for the $50,000. Second, step two, since the purchases are recorded on a net basis, we need to calculate the discount on the purchase using the terms we were given, which would be a $30,000 purchase times 2% means that we save, by taking advantage of the discount, $600. So our net purchase is $30,000 less $600, or $29,400 is the net purchase, which is also the net amount of the accounts payable. Step three, the goods shipped FOB destination that haven't been received yet at 12/31 are not inventory and should be excluded from inventory. Specifically, they're excluded. They are not a purchase yet. And so finally, we get down to computing accounts payable. And we have our beginning balance on December 1st of $100,000. We need to add back the payables for the $50,000 in checks that have not been paid yet as of 12/31 because we haven't mailed them. We add the net amount of goods received, the 29,400 that we calculated right here. And we exclude the FOB destination goods because they haven't been received yet. So the ending balance is 179,400. So again, what we did here was we adjusted accounts payable by adding back checks that weren't paid yet because we didn't mail the checks. We added the net amount of goods received because we assume we take the discount. And we exclude FOB destination goods because title hasn't transferred to us yet while the goods are being shipped. And we add that up and we end up with an ending balance in accounts payable. That's the end of Financial Accounting 15. We have video textbooks of information both on YouTube and not that are in 30-minute to 1 hour longer presentations, a little easier to watch. You know the YouTube channel. You can email me for a complete list of videos on YouTube. For live one-on-one tutoring and chat sessions, stltest.net is the website. And finally, if you have an interest in learning the book for free, Cost Accounting for Dummies, it's available in March of 2013. I have a free online course where you can listen in and learn the book for free, and you can email me about that. Thanks very much, and we'll see you next time.